Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg reporter Chloe Mele. Chloe, good morning.
Good
Let's
morning.
start with a stock that if you were to make a joke, you'd say it could be all Gucci.
Yeah, absolutely. Yeah, Kering is up very strongly this morning because the sales at Gucci, which is its flagship brand, but they did drop 10% in the last quarter. But crucially, that was very much in line with what analysts had expected. So for investors, for analysts, that's seen as reassuring. It's a sign that the turnaround under the new CEO, Luca De Meo, who started in September, is progressing quite well. Although it might take a while, it's making progress. And so the next big catalyst for Kering is really going to be the debut collection of the new Gucci designer Demna, which is happening in a couple of weeks at Milan Fashion Week. So that will be closely watched by investors as well as stylists. And for Kering, results are encouraging, and then for the broader luxury sector, this is also seen as quite reassuring. You know, we started the season with some positive updates from Burberry and Richemont, but then we had the big setback of LVMH coming in with quite a downbeat outlook with disappointing results. But now we've got those Kering results, and that will perhaps fuel the hope of a luxury rebound that is actually going to be happening at some point this year. So we are up very strongly for Kering, and that drove the rest of that luxury sector this morning, all in the green.
Chloe, I'm on a roll with jokes that I'm proud of myself for. Does BP now stand for buyback pause?
It might just be. BP is indeed pausing its share buybacks, which is a big deal for an oil company, given that this is a sector that is really known for and appreciated by investors for those consistent shareholder returns. And so BP is halting those buybacks and also raised its target for cost cuts for this year, through to 2027. So this pausing of buybacks, those efforts to reduce costs, this is all part of an attempt to shore up the balance sheet, and that is part of an attempt as well of this turnaround strategy, this refocus on oil and gas that BP has been working on. And 2025 has been a difficult time for the company. It started with pressure from activist investor Elia. It ended with the chairman getting rid of the CEO. We also had oil prices weakening towards the end of last year, adding to those challenges. And so the hope is that 2026 will be a little bit better. We've got a new CEO coming in April. She's got a really major track record of championing fossil fuels. So investors see her as accelerating that shift towards oil and gas and away from clean energy. And her appointment was taken quite well by the market when it was announced, but she does have a really big task ahead of her.
And I'll be serious for the last one, Chloe.
Okay.
We're going to turn to Barclays next. Shares in the bank rising slightly again this morning, but it's after it had a very good year.
Yeah, it had a really, really good year in 2025, and it looks like today from the results that 2026 will also be pretty good. So the performance from last year is expected to continue. We had, for example, the trading division, which has been a major revenue driver throughout 2025 because of all the market volatility that we saw. It had another great quarter. It's probably going to have a great 2026 as well. And then the targets that were set for 2028 seem to kind of show confidence. The company has plans to return more than £15 billion to shareholders through to 2028. So shares were initially higher at the open, but then pared some of those gains, now hovering a little bit quite flat. Some of that weakness might be driven by disappointment on those payout targets. You know, £15 billion sounds like a lot to me, but analysts had actually initially expected that it would be more around 17 billion. So there might be a bit of disappointment there. There's also a question mark that remains around Trump's plans to cap interest rates on credit cards over in the US. So that would potentially have quite a big impact on the US business for Barclays. And the CFO said this morning that this would lead to weaker volumes. So that exposure to the US is going to be also very much in focus going forward for Barclays.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.